All right. Hello, everyone. Welcome to the Financial Summit. Let's start off, Tone. We'll have, obviously, as the space goes on, we'll have more people join in and become part of the conversation. And if they end up missing this initial part of the space, obviously, every recording of every space is uploaded to our YouTube. So you can go back, you can re listen to all the things that have been talked about and how they have been talked about, like what was the context and everything. So it's all on YouTube. On top of that, we have Fin Summit's YouTube channel, guys, where Tone and Matthew do a daily show every day, and a lot more content is coming your way, from education to financial health to your own health when you are a trader. So, really looking forward to it, Tone. What are the plans, Tone? How are we looking in terms of new content on the Fin Summit YouTube channel?
Yeah, it's going to start. Matt's going to start another show with other traders called Trader Talks. That's probably going to start later this week. I may do a show with multiple traders as well. And looking forward to posting some high quality free education, which is something I've always been not just a fan of, but contributing. I think that over the years, education is becoming free with all the resources we have. So why not? Why not make the best free trading education source? And hopefully more people will come out to the in-person events and we get to hang out together. More info on the Maldives event coming soon. You can pre-register with a deposit for the Maldives event. More details will be published probably next month. And then it's still going to be a year away. And that event will absolutely sell out. We may need to even, pick up some more rooms. We'll see.
Oh, for sure. I would love it if we have to pick up more rooms. It's amazing, the Financial Summit as a event. Like, guys, if you haven't been to one, you should really try to visit it. It's not just about the luxury that you get there. It's not just about the resort itself. It's not just about Tone being there. It's all about learning. There are so many different people from so many different backgrounds, from hedge fund managers to money managers to traders. You have educational people. You have, this year we had people which were more into health. We had a yoga instructor. We had a health expert. We had what was the name? Mortius, right? Mortis. He basically is a performance enhancer. So a lot of people from different backgrounds, they talk to each other for 5 days and you learn so much. So if you haven't, visit our website, thefinancialsummit.com. So Tone, let's start off. I want to start by talking a little bit about the banking sector today. Like, what's really happening in the banking sector? From New York Community Bank, we are having like major concerns that smaller banks might start to collapse and everything. So give us your insight on that. Tone, you're on mute, I guess, if you're trying to speak.
Sorry. Are we talking about a specific region or specific country? I'm sorry, I missed a little part of that.
Basically about the US banking sector as of right now. I'll just put some tweets in the nest for your reference, but there have been some news.
Throw some tweets in the nest. Look, guys, I'm not concerned about a financial collapse. The markets are clearly not concerned about a financial collapse. The financial collapse of banks is the most dangerous panic the United States can have. It affects every single company. And just based on the way stock market moved today alone, these banking issues are seen as completely irrelevant by the free market. Now, yes, things can seem irrelevant until they're relevant. But we've seen financial panics in the recent history, like 2008 financial crisis. Then more banks failed in 2014, mostly around Europe. Just a few years ago, we had 3 American banks fail. So I'll take a look at these tweets in the nest, but I am generally not all that concerned. New York Community Bank, yes, it's one bank it's another bank that will fail. Like, if banks are failing one at a time, all it does is it strengthens the big banks like the JP Morgans, the Citigroups, and Banks of America in America. And the government will not let those banks fail. And they're just going to absorb these smaller community banks. Is this good for the market? No, absolutely not. It's not good for the economy. But is it good for the stock market? Well, probably, because it's, again, consolidation in the top companies, which is something. Remember how in the last spaces there were concerns? Well, aren't you concerned about the stock market when very few stocks are driving the market all the way higher? And this is an example of why few stocks are driving the market all the way higher. Because when small companies like New York Community Bank fail, their stock goes to zero. All their clients and all their, their capital goes to the big boys like J.P. Morgan, and the stock of J.P. Morgan rises because they don't pick up the crap from those banks. They pick up the best stuff from those banks. So these are the kinds of things that actually help drive the market higher and create concentration in a few. And this is also very good for the government. I'm not trying not to get too political in the financial summit, on the financial summit medium of social media, where it's a lot easier for the federal government to control 5 large banks than to deal with thousands of small community banks. So this is absolutely encouraged by the federal government, because our current federal government wants the least amount of freedom for the citizens. And it's a lot easier to control with one bank. Back when I was a kid in the Soviet Union, there was one bank, the Bank of Moscow. That was the Russian federal bank. That's it. It's a lot easier to control one bank by a government than thousands. So this is absolutely encouraged. And I don't see this as a widespread financial problem.
So, as per you, Tone, you're saying that this is similar to what happened in 2008, like not 2008 to be honest, 2009-ish, when JP Morgan stepped in and bought a lot of small banks, and basically it did enhance their portfolios a lot. Like the amount of business that was coming in was insane, and we could see that even now. And I think same happened with the other bigger financial institutes. So you're saying that even if these sort of things are happening, this is good for the stock market, bad for those banks, but good for the stock market overall, because the weightage of these companies is higher in the index?
Well, that's correct. It's not just the weight higher in the index. I mean, this particular bank may not even be in the index. Like, I don't know how big the capitalization is of this bank, but this is why a few companies are driving the entire stock market, because investing in small banks like this one could potentially be dangerous, while investing in large banks is a lot safer. So remember, it's all a confidence game. As this bank is collapsing, similar banks to this bank, which is probably at least 100 banks, investors in those banks are going to get scared. Well, if my bank has so much similarities to this little New York Community Bank Corp, then the bank stock that I'm invested in is also at risk. So why don't I sell this bank stock, and I'm just going to invest in JP Morgan or Bank of America, banks that are not going to be failing like this bank is. So once again, this drives capital into the big companies and away from the small companies.
So, okay, let's move on to a little bit about stocks, Tone. So I've posted a chart, Tone. It's a very good analysis that was performed by the poster. I think it's really, it looks like, when you see the chart for the first time, you're like, what have you done? Nothing. But she has tried to kind of put some information there, where she has said that the Mac 7 that we call them are now turning into Mac 4 by looking at the pricing or the price movement of all these 7, like the top performers and the lower performers. Do you think that is really happening? Because for me, that is not true. It might be represented in the price action, but I don't think that's true. So what's your view on the chart that I've posted just now?
Apple, Tesla, and Google have been underperforming the S&P 500, NVIDIA, Meta, Amazon, and Microsoft. But this is also why a single company does not go on forever ruling the market, right? Perhaps Google will be replaced in the Magnificent Seven by another company. perhaps Apple's days are numbered as well. I think Tesla is more short term, but Tesla is a fairly new company. I think Tesla still has a bright future, but that's just my opinion. And yeah, she should also post, the next 15 contenders and see how they are performing. It's easy to cherry pick, on a 4-month span, but it's also, like I said, cherry picking, right? Yes, these three companies have not performed very well in the first 3 months of the year or the first 1 month of the year. This is a very small sample size. And for all we know, over the next 3 months, it'll be the complete reverse, where Apple and Google and Tesla start to significantly rally while the four stocks that have been rallying top out and take a break. So everything can easily come back to the mean right at the S&P 500 level.
I was also looking at one of the ratio charts, Stone, NVIDIA BTC. Remember we talked about it a while back when Joe was with us, and we had a chat. He posted that chart out, and I was surprised to see the strength that NVIDIA has shown against Bitcoin. I know those charts give you nothing, but looking at a perspective that no altcoin in the history has been able to create new all-time highs. Only maybe there might be some, but I am not aware of any. Mostly stocks, especially the bigger stocks, have been in a downtrend against Bitcoin. NVIDIA is the only stock which has been consolidating from, I think, around 2015 to now. If you look at the chart, it basically is a very consolidating chart. It's not like a big up, big downswing chart. So do you think it's a signal that NVIDIA has a very good future, because we see it from the perspective of free technology, or we see it from the perspective of technology, and we are comparing technology against technology. So what are your views on NVIDIA as a whole and NVIDIA BTC chart if you have access to PC?
Well, I can post the ratio chart between NVIDIA and Bitcoin, but I wouldn't want to look at it. I don't think they have anything to do with each other. I mean, yes, they are both in the technology sector, but Bitcoin acts more like a currency and as a safe haven asset that is unconfiscatable, censorship-resistant value transfer. NVIDIA is greatly benefited by this trade war with China, the trade war that was started by Donald Trump and accelerated by the current administration with Biden for very different reasons. Trump was never interested in a military conflict with China. He just wanted for Chinese technology companies and other companies not to take advantage of the American consumer. And that kind of started a little bit of a trade war, but he was never militarily aggressive towards China. The Biden administration is the complete opposite of that. They couldn't care less about the American consumer. And all they care about is making sure that China does not grow and be more important to the world than America. And they would love to start a military conflict using Taiwan. And both of these, this is now an 8th year, going on 8th year battle with China. And if I'm going to pull up the stock of NVDA, I'm sure I will see a massive rally over the last 8 years, starting with the moment Trump took office. And that's exactly what I see. Wow. So NVIDIA made an all-time high in 2007. And going into Trump's election, NVIDIA was still, let me see what percentage it was down. NVIDIA, when Trump got elected president in 2016, NVIDIA was still down about 20% from the 2007 all-time high. That is absolutely crazy. I want to check if JP Morgan, the banking sector, was already at a new all-time high by the time Trump got elected. And from the moment Trump got elected, from NVIDIA being down about 10 to 20% at the time, it was like an $8 stock. And from that moment, this $8 stock, and I'm sure it had splits, is now $631. It's not because NVIDIA is doing something absolutely incredible. It is all about the trade war and potential hot war with China. And NVIDIA has been the greatest beneficiary of these government policies. And I'm not saying that, well, I think the second one is a little misguided. Trump's policy was not bad, but it benefited NVIDIA. So comparing NVIDIA to Bitcoin over something that was completely created by the government is, I think, is not a needed comparison. They are going up for completely independent reasons. And yes, NVIDIA is a good company. If it wasn't a good company, it would have never gone that high. Other chip manufacturers have also done well, but not as well as NVIDIA. They took the best up. They made the best out of this opportunity. And looking back at it, we're all idiots not investing in NVIDIA back in 2016. It's done almost as well as Bitcoin. Now I am kind I am going to pull up the ratio. I'm going to take Bitcoin. Divided by NVIDIA.
Yeah, so that's the reason I don't look at these charts, because for me, how I see it is, okay, Bitcoin will have a very deep bearish market, and it's not that long, but it's still there. So how I kind of look at these ratio charts is to find opportunities elsewhere where I can basically put my money in at the time I'm waiting for the price to do something. Because as traders, or at least as technical analysts, we have the power, not the power, we have the knowledge to know what the price action should do from a certain point in time. So that's why I was looking at these ratio charts, and I was quite surprised to see how NVIDIA and Bitcoin has performed like this, because I did this before when I moved some of my money from Bitcoin into Tesla, and basically had a good year worth of profits from that. So that's why I was asking you this question, like not from the perspective of just fundamental, but also from a perspective of a trader, how you see these charts.
Yeah, so I have the data, and ironically, the low in the ratio, obviously when Bitcoin was rising in 2013, it would significantly outperform NVIDIA. But on a monthly scale, the low, Bitcoin tops in, this is Bitcoin rises faster than NVIDIA, and NVIDIA rises faster than Tesla. So this is, Bitcoin is up over NVIDIA since Trump's inauguration in January 2017. And Bitcoin is only up by, looks like it's up by 120%. But since the Bitcoin's 2021 peak, obviously NVIDIA has gone up. So Bitcoin was still the better investment. But when you look at the chart of NVIDIA, everything changes the moment Trump got elected. And it's accelerated after Biden's election, but for a completely different reason. So I just wouldn't compare the two. I think they have nothing to do with each other.
No, that's completely fine. It's a point of view, and that's what the spaces are for, to understand from people who have been in the industry for a long time what their point of view is, because I can find like 2,000 charts which might not make sense, and Tone might be able to highlight, okay, this one is wrong because it does not make sense. So Tone, moving on, I want to talk a little bit about Dixie. We had a space, I think around 1.5 months back. Guys, it is on YouTube, and you can write down my words. Tone said this. He expected Dixie to rally, and so did we. We rallied, and it's been rallying hard. Tone, where are you seeing Dixie going from here? Are you seeing it topping out soon, or are you expecting more higher prices for it?
Yeah, so I'm looking at the chart of Dixie DXY. This is the dollar versus Western currencies, and this is important. It's the dollar versus Western currencies only, and Japan is a Western nation. It's classified as a Western nation. And it put in a beautiful weekly hammer reversal candle on an MRI low, so an MRI buy the last week of December. And we've been rallying ever since. If we have about 5 more weeks to go, before we reach an MRI top. Now, the last MRI top came in September. We went from an MRI top of 107 in September of 23 into an MRI low in December of 23 at 100, just above 100. We're now sitting at 104, so we're about halfway. Let me put the Fibonacci's on this chart. And we actually just reversed from the 62% Fibonacci. Those of you that watch my Bitcoin videos know how I was talking about $48,000 in Bitcoin being the 62% Fibonacci. I am a huge fan of two Fibonacci markers, the 38% and the 62%, for very different reasons. I believe that when we get rejected from the 38% of Fibonacci retracement, there's a high probability we will go and make new lows, and we go all the way down. But when we break the 38% Fibonacci retracement, I'm now looking at the 62. The 50% is not all that relevant to me. And if we get rejected from the 62, I am not expecting us to go to new lows. I'm only expecting us to go no lower than that 38 and then reverse and go and make new all-time highs, or the highs versus where the Fibonacci line begins. Now, I don't know if you guys can picture it or not, but the story is we reversed off the 62% Fibonacci around 105. And I now, maybe another week-long pullback. We have all the moving averages crossing over next week. And I still think DXY is going to go up. The DXY, the dollar, is going to rise, especially against the euro. I think the euro is in a lot of trouble. I think the UK is in a lot of trouble. UK is now committing the military they don't even have to Ukraine, which is going to cause a lot of loss of faith and confidence in the UK. The euro is a basket case. Somehow they managed to get past this winter. I don't know how, but they found a way to weasel out of their energy crisis again, somehow. And I think Europe's in trouble. I always think Europe's in trouble. And one of these days, the DXY is going to just rally to 120 and catch everyone by surprise. So I remain bullish the US dollar. As much shit as I talk about the United States in the upcoming election, the United States is still not as bad as the European Union or Japan with their 800 debt to GDP ratio. I'm exaggerating a bit, but it'll get there.
Yeah, I agree with you on that. And also, Tone, like you're talking about Fibonacci's, I basically use it in a similar way, but what I wait for is a retracement down into the 0.62, the golden pocket area. Like it can go a bit lower than that. I'm quite okay with that. And then when you are basically rallying upwards, if you get rejected from 0.38, that way I basically say that the trend is over. So let's say we were going higher. If you come down, retrace into the golden pocket and then try to bounce back up but get rejected, for me that's a lower high that is formed, and I from there on I start looking for shorts. So Fibonacci's, guys, is one of the strongest tool that you have. Like it is very, very good if you know how to use it. There are so many ways. Like for Bitcoin, Tone, I was basically looking at the move down. So what I don't know if you have tried that or not. So what I did was the first leg down that we had until I think from 68 to around the first dip that I think it was around 43 or 42, whatever it was. If you draw a fib from top to bottom and look at the minus 0.62 and minus 0.786, it was the exact bottom where we landed. So it's a very, very strong tool, guys. If you don't use it, learn about it. There is a very good book available. I will ask the research team to post the name of the book out. Read it. It's a very good educational book for Fibonacci. So Tone, I was about to get to this topic about Europe and obviously UK as well. It seems that UK specifically, with their economic conditions right now, committing to this war or committing to this, I don't know what the right word for it is, the military action that they're taking right now, it's complete, nonsense from a economic perspective. They don't have the resources, they don't have the military, they don't even have enough money available to them. Don't you think they should be more politically correct in this scenario, that how should they be tackling this whole situation? Because US is in a better position. They can do these things at least better than UK.
Yes, absolutely. But look, it doesn't have to make sense. There's numerous problems with the UK. One is the UK is not independent. The UK does what the United States asks them to do. The UK also does what the unelected European bureaucracy created by Klaus Schwab and the World Economic Forum tells the UK to do. Now, but though the only time in the last, decade or two, the UK decided to let the people decide their fate, they voted for Brexit. And this is why the UK will never let the people decide anything ever again. Now, the Brexit was an absolute disaster for the UK economy. But the reason it was a disaster for the UK economy, the UK politicians and the leaders and the people that put those leaders in those positions, they could not believe this Brexit vote, and they didn't expect it to happen, and they never implemented any of the policies of Brexit. So the people of the UK, by voting for Brexit, there was always going to be some downside and some upside. Properly executing the Brexit plan could have given the people more upside than the downside. But the politicians never implemented a single iota of the upside that comes with independence and Brexit. But they did implement all the downside that comes with it. So the UK people got completely shafted by the UK politicians to teach them a lesson of what happens when the people vote against the self-interest of the political elites. And this trend continues where the people are not being consulted. None of the UK citizens would be interested in sending troops that they don't have and ships that don't work into the Ukrainian conflict or any other conflict for that reason. And I want to say that the UK politicians are living under a delusion of how strong they think their military is, like the United States is. I mean, the United States is living under a delusion of how strong they think the US military is. The UK is not living under that delusion. I will say they have a very good spy program with MI6, but that's about it. But a spy program is not, military on the ground or in the air or in the water. And they're not living under the delusion. They're just following orders without any regard for their people. And I think it's just another disaster. And I really don't like conspiracy theories. And but the one that's starting to be more and more plausible is that the Western governments understand that their world is collapsing. Their control over the world is collapsing. Their economic systems are collapsing. And they need to go to war because they have nuclear weapons. The only way to distract the people from their political collapse, political and economic collapse, is going to be masked by their desire to start a real World War III. And if it's a real World War III with tactical nukes flying left and right, they can then blame the other countries that fire back, and it wasn't their fault that the political and the economic collapse came. I always hesitated from bringing up this kind of conspiracy theory, but as these events unfold, like what the UK is doing this week, you have to start considering them as real possibilities in their thinking.
Thank you, Tone, for the insight. So guys, as I was talking about, Moritz is one of our listeners today. Hey Moritz, how are you? I hope everything is well on your side. He was at the financial summit as well for breathwork and strength training and everything, and he has coached a lot of uh, good athletes. So yeah, follow him if you want to and want to learn anything. He has
Well,
his application as well. I'm
wait,
sure there will
is
be a
he in the
link.
space?
So
How come I don't see him?
yeah, I can see him. He's the top one for me.
Is it possible I'm not following him on Twitter because he's not on Twitter often?
Oh, he's not on Twitter. He has 91 followers. Trust me, he's never on Twitter. I guess it's always the gym.
Yeah.
So moving on, Tone, there's a question for you in the chat. How about CHF USD? Tone, is Switzerland the place to go for Europeans? I think you answered this last week, but please do answer it again.
It's not. The place is still the US dollar. I can look up the Swiss franc. CHF is the Swiss franc. I'm going to take a look at the US dollar versus the Swiss franc and also the euro versus the Swiss franc. As I look at the euro versus the Swiss franc, it's euro divided by Swiss francs. The euro is dropping against the Swiss francs. So yes, the Swiss franc is significantly outperforming the euro, but I also want to see US dollar versus the Swiss franc. And the Swiss franc has actually been outperforming the dollar, but I don't believe it will last. Currencies are all a confidence game. And while the Swiss remained completely neutral during World War II, and they made sure they're useful to all sides so that no one invaded Switzerland, not the Nazis, not and not the Allies. This time around, Switzerland is not neutral. Switzerland is completely on board with the economic agenda of the West and the European Union. And while I do see the Swiss franc performing very well against the dollar, I just don't see how it will last. I mean, the Swiss independence is gone. Yes, it's one of the few countries remaining in Europe with very good gun laws and political laws where they allow people to vote on laws. I just don't see it lasting. If the Swiss economy and the Swiss politics become a nuisance to Europe, the way Orban and Hungary have been a nuisance to Europe, there will just be a regime change in Switzerland. The times are very, very different. Yes, for now, it's a decent choice for Europeans, but I would trust the US dollar over the Swiss franc personally. But it is a better choice than the euro or the pound, of course.
Okay, let's move on from DXY to our favorite topic, Bitcoin. Tone, what are you seeing? What's the price action telling you right now? We are being consolidating in this small range of around 6.5% for around 8 weeks now. How are you seeing this price movement? And I'm talking about body closes.
Yeah, so wow, the Bitcoin is really breaking out. We are now above 44,000, which is great. It's a beautiful breakout. This morning on my video on my channel, I stated that 44,000 for me is an area of resistance. The daily chart is great. I was really hoping the breakout would come tomorrow on a green star candle on the daily MRI count. And the weekly will get its green star candle next week. But my allocation has been 100% bullish. I redeployed all of my capital. I exited 75% of my position, of my entire retirement account that was in GBTC. I exited 75% of that, and I converted the other 25% from GBTC to BlackRock and Fidelity ETFs. And I redeployed that entire 75% over the last few weeks back into Bitcoin, mostly the Fidelity ETF, and I have some BlackRock ETF. I am 100% bullish on Bitcoin. I'm fully invested in Bitcoin. The MRI weekly and daily are going to come in later this week and next week. Today's rally is absolutely massive. And I do think it's going to tap out a little bit here and probably pull back into the moving average. Now that it kind of went up really fast, it's kind of good. We are sufficiently higher than the 50 period moving average on a daily, and the 20 period moving average on a daily is actually below the 50 period moving average on a daily, but it's going to catch up super, super quick. I think that if we rally a little bit more to say 44,500 and then pull back into 43,000, that would be the perfect pullback to then kick off a proper rally for new swing highs of 50,000. If you guys recall, over the last couple of, I'm not sure if it was on YouTube streams or here in Spaces. I think it was in Spaces last week when we talked about where I'm expecting.
It was last week Wednesday. We were talking about it.
Yeah. So where do I expect the price going into the halving? I expect the price to break 50,000 before the halving. Now, that can be next week, or that could be in early April. Either way, I'm expecting us to be in the low to mid $50,000 range at some point before the halving and pull back from that level. So either we reach that level.
Lost tone, some technical error, but let me try to find out, guys. Give me 2 minutes. Tone, you there?
Yeah, I'm here. Can you hear me?
Yeah, we can hear you now. Yes.
Okay. Nothing changed on my side, so maybe that was you. This is why it's good to have always one more speaker here. If anyone that's not a troll that I actually know, like Winston or Agartha, wants to come on and just have a little chat, let me know. But so as I was saying, I'm expecting low to mid 50,000s at some point before the halving. This can happen next week, and then we have a pullback and then rallying with the halving. Or it can happen right before the halving, and then we pull back with the halving and a little bit for a little time period after the halving. Either way, I am anticipating us to cross the $50,000 mark at some point before the halving day.
But Tone, with this sort of consolidation that we are seeing, like this has been a consolidation in front of a great sell-off from GBTC, right? GBTC has been selling, market has been just absorbing everything. Now, obviously, I also feel, I personally feel 50,000 is a psychological barrier for the price to break. But after such a consolidation, the price could move faster and higher pretty quickly. Like because if the selling pressure is reduced and there is still a buying pressure coming from both halving as well as the ETFs, don't you think that maybe psychologically, yes, 50K is a big number, but we might just blast past it?
Blasting past it would mostly depend on GBTC. Okay, I think GBTC would be the most important barrier in whether we blast past it or not. And GBTC has been selling a little bit less. I'm now going to start taking weekly statistics, not daily statistics. I mean, daily statistics are interesting, but the weekly statistics, will give us a nice, clean picture. So it's possible we'll blow through it, but there is also other selling pressure. I honestly think that some of the miners are going to go out of business, and they're just going to sell some of that Bitcoin to keep their operation alive. I think Mt. Gox is going to be, distributing more coins, and and they're still big sellers. There's a couple of big sellers from the bankruptcies involving 3 Hours Capital and the BlockFi stuff. There's still a lot of sellers out there. So we will see. But yes, it's absolutely possible that we blow through 50. But I still think the upward trajectory is limited. I mean, we were just in the 30s, right? If we rally into the mid 50s, it's going to need a pullback.
That is true. That is true. We sometimes forget to see how much percentage move it is. It's like we know Bitcoin can do these things of giving big candles and kind of skipping past prices, but rallying from 30-ish K and going into the 50Ks in a matter of few months, not even few months to be honest, 2.5 months, it's a big deal. So yeah, I agree with you. It's I sometimes you forget about those things. So, Tone, from the ETF perspective, any updates from your your side? I know you have been maintaining a very, very detailed Excel sheet to track all these ETFs, and you have been talking about it. Any update that you have?
Well, the update that I have is I'm gonna start keeping statistics, like maybe probably Mondays. I'll get it as of Monday or as of Friday, probably as of Friday. And but the last couple of days, in the last couple of days, there's been slightly over 1,000 Bitcoins inflow versus outflow. So these ETFs are buying more Bitcoin than GBTC is selling.
And also, MicroStrategy is buying.
They're buying again?
Yes, they have. They basically, I think, bought around $37.2 million worth of BTC on 6th of Feb.
No, very good, very interesting. Yeah, BlackRock is now slightly buying more than Fidelity. I was really hoping Fidelity would catch up, but it's possible that in the next 6 months, BlackRock will run away from Fidelity. Right now, is BlackRock and Fidelity head and shoulders above the rest. ARK and Bitwise are treading water a little bit, and then the rest are, struggling. Invesco, Franklin, Valkyrie, and Vanek. They are struggling with the amount of Bitcoin they're holding. So right now, just for some statistics, GBTC still has 475,000 Bitcoin, but they used to have over 600,000. GBTC has sold almost 150,000 Bitcoin, representing almost 25% of what they held pre-ETF announcements. That's great. GBTC lost 25%, but they're still holding 472,000 Bitcoin. BlackRock is at 75,000. Fidelity is at 63,000. So BlackRock, Fidelity, 60s and 70s, 1,000 Bitcoin. And ARK and Bitwise are hovering about 15%. So they're only 25% of the Bitcoin that Fidelity has. And then Invesco, Valkyrie, Vanek, and Franklin are between 1,500 and 7,000 Bitcoin. So they are at best half as much as Bitwise and like 10% or 10% as much as Fidelity. So I hope this trend continues. And one day, soon, I think sometime this year, we will see Fidelity plus BlackRock hold more Bitcoin than GBTC. I really hope that happens soon. All of them combined versus GBTC. Right now, all of them combined is 185,000, and GBTC is 472. So all of them combined are about 35%. I'm guessing 35 to 40% of GBTC, but all of them combined will hopefully cross that threshold sometime this year.
So currently, all of them combined, apart from GBTC, is right now somewhere close to what MicroStrategy is.
All of them combined right now is 185,000 Bitcoin. I'm not sure how much MicroStrategy has.
190,000 Bitcoin for MicroStrategy.
They're about the same, but these ETFs will probably in a week or two, they will hold more than MicroStrategy.
But that's true. But
there's a big difference. There's a big difference, right? You can't compare can't compare assets, or you can't compare institutions that hold money on behalf of people versus a company or a person that holds money on behalf of themselves. A very, very different comparison. It's kind of like saying, JP Morgan is holding more money than Apple does. Well, yeah, because JP Morgan is holding it on behalf of 100 million clients.
100%. But looking at it from a perspective of Michael Saylor, this is going to be like, I have just posted a tweet in the Nest about how MicroStrategy's accumulation has been over the past 2 years or 3 years or so from Q3 2020. And
it has been a steady growth. Every time they have been buying. So there were times when people called them, what are they doing? It's the worst decision that they're making. And right now he's sitting in profit. He's basically it's not, I don't see this as a far away moment where MicroStrategy is going to be one of the biggest firms in the world. So from a business perspective, this was a masterstroke, in my opinion. What do you think, Tony?
Look, I completely agree. No one had heard of MicroStrategy before Saylor started buying all the Bitcoin. No one still knows what the hell they do as a business. But they could become the biggest market cap company in the world because their stock is now correlated to the price of Bitcoin. And as we expect, Bitcoin creep up towards $100,000 a Bitcoin. They will be the biggest market cap company in the S&P 500. And it sounds absolutely crazy, but that's what's likely to happen. Other companies will start buying Bitcoin also. There's just so many tailwinds for Bitcoin that I can't be any more bullish than I am now.
Oh, I totally agree. Like I'm basically surprised because I basically have been working in this sector for a while, and never in my career has anybody approached me for a role in crypto market, right? Until now. And suddenly after January, don't you believe it or not, like there have been so many approaches in regards of digital assets from a lot of hedge funds. Like this space is going to blast off. People do not realize it yet. They still think it's gonna, shatter, it's gonna finish off, it's gonna go to zero. But people still do not see the vision of where this cryptocurrency space, not all of them, but specifically Bitcoin, is going to reach. It's very, very shocking to me that some people who are financial experts, they still don't understand it. So moving on to, let's talk a little bit about your least favorite topic, China. I know you don't like it, but I want to talk from a perspective of economics person. Now, in the last 4 weeks, China has seen a total inflow of around $21.2 billion into the market. Until now, it was always an outflow. So the inflows are starting to come in. So it's more or less like a sale. Gold and silver sales in China have hit a 6-year high. So the most physical assets are booming in China. And obviously the Public Bank of China is trying to stop short selling. They're trying to put in more money into the market so that people can buy. And we talk about this every other day and talk about where do we see China. But do you think they're turning the corner now with Alibaba's earnings came out, was pretty good. The stock started pumping hard after that. Do you think it's time that China has maybe is close to turning the corner in regards of their stock market?
Yeah, I mean, look, in general, I am more bullish China than bearish China. I do not foresee a Chinese collapse. So sooner or later, the last guy has panicked and sold, and the only place left to go is up. The same happens in reverse as well. Eventually, markets top out, and there's nobody left to buy, and the only thing left to do is, for the market is to go down. Let me pull up the Chinese index. Let me go to indices. I do look at the Hong Kong, the Hang Seng index, and it has been going down for a while. I don't like this double bottom, but now that I'm looking at the chart, and I'll probably pull it up in my next video, last month was an MRI buy on a monthly scale. We had an MRI buy, and the last time we had an MRI buy, it was in November of 22, and the market rallied. That's when the market made a low. Now, right now, we are close to a low, but I see massive divergence here. Not divergence, but it's a higher low, and the RSI is way higher. The MACD is way higher. So it's not that bad. And this monthly MRI buy, it looks like there was a panic last month. And this month, we are already rebounding in the Chinese market. The Chinese market has been dropping since its top in October of 2017. So the Chinese markets have been falling since 2017. And 2017 was a double top versus 2007. So yes, I'm still a believer that Chinese markets will recover. Remember, something else, as we talked about earlier with NVIDIA, right? Early 2017 or in 2017 is when Trump started the trade war with China, creating lots of problems for the Chinese companies. And China had to find new markets. China is now, I think what China needs to do is they need to become best friends with India. I've mentioned it earlier. China is now cooperating with Russia very, very nicely, way better than they were in 2018-19. China is now going to be cooperating with Iran, which is a very big market, has a large population. And I think that Indonesia is a prime market for China to try and go after. So I think that it's very possible that the Chinese markets have bottomed. It would be nice to see a lower low in the Chinese markets because then there would actually be divergence versus the oscillators. But it doesn't have to make a new low. Yes, it's a double bottom. I don't like double bottoms, but it's one of those double bottoms that has potential of a reversal. It's a little too early to say. I like seeing bullish trends before I, say something or catch a falling knife. But on a monthly scale, this was a falling knife that was catchable, and on a daily scale as well. Not so much with the MRI, but with alphanumerics. So it's possible to turn the corner. It has to do one more thing. It has to break the prior swing high, which took place in January of this year. And it also needs to establish a higher swing low. But is it possible that the Chinese markets are ready to reverse? Yes, because I think China is finally going to change the corner. And they know, just like Russia, that the future is not in the West. The future is in the East and in the global South.
100%. Like looking at the chart, sometimes you just have to take the call, right? Like how far can a market go? Like a country, like an economy like China, how far low can it go? You have to take the call. And I basically rhyme with you on that I feel Chinese market is close to bottoming or already bottomed. And yeah, just wait for the trend to establish. Just wait for a swing high and a higher low, and there you go. You have a nice little bullish trend in the making, and yeah, ride it as far as you can. So Tone, those were all the topics for today's space. Anything that you want to add on top of whatever we have discussed? You're muted, Tone.
Sorry, I'm muted. No, that's about it. Without Joe here, we didn't really cover much of the fixed income markets. I'm going to maybe glance at the bonds. Just want to see if the interest rate has done anything interesting earlier this week.
I think the 10-year was higher today.
10-year was higher today, but the 10-year peaked on Monday, February 5th, and it's pulled back a little bit since Monday. We did our spaces on Sunday. Monday was a very bullish day for the 10-year, for the yield. And right now we are sitting at a higher yield than where we were during our last spaces with Joe. Hopefully Joe can join us on this weekend, coming up on Sunday, which is Super Bowl Sunday, by the way. So I'm probably going to start drinking around 3. So we may have to do the space a little bit earlier in the day, closer to 1 o'clock. And I still believe
we could have you on the space a little drunk. Don't worry.
Mm-hmm. So I do think the interest rate is going to go higher. The interest rate bottomed out in December. The 10-year yield bottomed out in December. We started going up. We made a bit of a low a few days ago, and now I think the 10-year yield is going to go back up. So let's see on Sunday whether the 10-year yield is at a new swing high, and the swing high in yield is 4.2% on the 10-year. I do pay attention to the 10-year. I think the 10-year is the most important interest rate because it sits in the middle.
So sorry, Tone. I basically had a question from not my perspective. Like for people who do not understand the rates side of things, like how can you relate rates to your like no other markets like stock market, Bitcoin? Like if you're looking at a rates chart, what can you look at it and what can you relate it to in the stock market?
So I personally would try to avoid relating interest rates to the stock market, or interest rates to the commodity market, or interest rates to the Bitcoin market. I do not like correlations between interest rates and other markets. And the longer your time scale, the less I feel these markets should be correlated. On a very short-term basis, there is a correlation on very short-term basis. But that's not because there is a real correlation between rates. Let's call them private assets and public assets. The bond market is public assets. That's the government bond market. The stock market is private assets, even though the stocks are publicly traded. Don't confuse that, right? Stock market is a private market. The bond market, the government bond market, let me be specific, is a public market. Now, there is a bond market in private equities, but that's still a private market. And private equities are publicly traded, but that's still a private market, okay? Now, on a short-term basis, during FOMC Fed meetings, whenever the interest rate drops, markets tend to be very bullish because people mentally, for some crazy reason, have been brainwashed to believe that lower interest rates are good for stocks and high interest rates are bad for stocks. In reality, they are uncorrelated markets on the long-term picture. We can discuss why people have been brainwashed into this thinking, but I don't think we have time for that. Maybe another dedicated space. People will borrow money at 5% if they feel that they can do something with that money and earn more than 5%, say 8 to 10%. Anyone will do this, right? If you can buy a house and you can profit more than 5% a year from buying that house, you will borrow money all day long at 5%. But if the real estate market is dropping and everyone is moving out of your neighborhood because, you know, they defunded the police, why on earth would you borrow money at 1% to invest it in something that is going to lose you money? And this is why the bond markets and the speculative private markets are uncorrelated. Okay. Now, why are the bond markets so important? Well, the bond markets are important for multiple reasons. They're massive. There's more money invested in the bond market than in the stock market, which is crazy, completely asinine. I used to think it was like 10 times more, but it's not. It's more like 3 to 4 times more. But still, we're talking 4 to 5x of money sitting in the bond market than in the stock market. So therefore, a 5% drop in the bond market is a massive loss of wealth for the people. And the majority of the people are actually sitting in the bond market. This is your CDs, this is your pension funds, this is all kinds of money that's parked in government bonds. And when an interest rate goes up like 1 percentage point, that is more than a 5% loss of your bonds. The curve, the bond curve, is not linear. Like as the yield on government interest rate rises, the value of your bond portfolio starts to go down exponentially. So the amount of wealth that is gained or lost with rising and lowering of that interest rate is massive for the population of your country. And it creates a wealthy population versus a struggling population that has all kinds of ripples throughout the entire economy. That's one example as to why interest rates are incredibly important. The other is the funding of the US government. Because the US government is not able to balance a budget like a normal human being, US government runs at a deficit. And they have to finance an additional $1 trillion worth of debt every single year. And they never pay back any of the principal. And the following year, they have to finance another $1 trillion on top of the $30 trillion the year before. And the following year, they have to finance 31 trillion and 32 trillion. And that's why you're seeing the national debt rise very quickly. And the higher the interest rate of the bonds, the quicker this debt spiral is going to happen for the federal government or your state government or your local municipality. So these are the reasons why government bonds are so important, because it can literally make and or break the society around you. But as far as the bond yield and its effects on the stock market or any other private market, that correlation is very minimal and a stretch at best.
Well, that was a knowledgeable knowledgeable thing to know. Well, that's it, Tone. That's it from me. Thank you guys for joining in. Tone, any closing arguments from your side?
No, that's it. Shout out to a few more people that joined. Don Bay, thank you. Don Bay knows a lot about bond markets because he works with pension funds trying to convince them to put Bitcoin in a portfolio. And he knows better than anyone how risk averse pension funds are. And they're sitting in these bonds. And when the interest rate rises, these bond portfolios for pensioners start to look like pure crap. And when these firemen and policemen and teachers retire, they realize that, hey, this shit might run out of money.
Well said, Tone. Well, thank you so much, Tone. Thank you, everyone, for joining. We'll see you on Sunday for most likely early. So let's say Sunday around 12-ish, or I'll have a chat with Tone and we will put out a tweet for this. Yeah, we'll be hearing a lot about what happened in the market during this week and what to expect in the coming week. Also, any major events or any news that comes out during the next 3 days, 3-4 days. We will be chatting about that as well. We'll have a lot more speakers. So guys, do join in again and talk to you all soon. Thanks a lot, Tone. Take care.
Yeah, Bitcoin's still pumping and looking good. But again, I think we're going to top out and pull back a smidge sometime over the next 24 to 48 hours. Bye, guys.
Stop looking at the portfolio, Tone. It's going to go much higher than where it is right now. We all know that. Well, thank you so much, everyone. Talk to you soon.